Hi there, you're watching Your Trades on ET Now with me, Shreyansi Singh, and with me is Priyanka Uppal. And over the next half an hour, we'll help you make sense of the day gone by in trade. And what a day it was, right, Priyanka?
Surprising day, I think.
Absolutely surprising, just about sums it up, because we were just about to write the day off as a lackluster day of trade coming in, but took a turn for a much brighter day coming in. For Nifty, managed to scale that record high yet again, not just the Nifty, the Sensex as well. And there was some underperformance though coming in when it comes to the broader markets, and that is where we saw a little bit of the broader markets being on the back foot, but the Nifty Bank was also holding up quite well. But let's also take a look at the star performers, and lots of those. The media sector, Nifty Media, Nifty Energy, Nifty Realty, those were your top sectoral gainers. And good gains coming in. Realty was really cementing a lot of gains today. And on the flip side, of course, some pressure coming in. When you take a look at PSU Bank, IT, consumption, all of those were on the back foot. A host of those IT names were on the back foot, the likes of Tech Mahindra, LTI Mindtree, all of those had cuts of about 2 to 3% coming in for all of those IT companies. But let's also take a look at what really was powering through, and well, Power Grid was the one that was powering through, 4% gains coming in for that one. And multiple order wins, of course, and that Goldman note also maintaining a buy. And Goldman was also bullish on NTPC, so it was Goldman that was spurring a lot of action when it comes to NTPC as well, because that stock was also buzzing away in trade. IT Pack, like I mentioned, was on the back foot, and largely that was the kind of move that we saw coming in for a host of these counters in terms of top gainers. From the banking pack as well, you did have Axis Bank and HDFC Bank doing quite well for themselves. And from the consumption side, there was Tata Consumer on the flip side and Titan on the flip side that weren't doing all that well. But let's also take a look at what else was really happening, and we couldn't look away from that SEBI not coming in for those two big ticket IPOs that we're all watching out for. So I'm talking about Hyundai's 25,000 crore as well as Swiggy's 12,000 crore IPOs, and those are the ones that we're watching out for, and definitely something that we're keeping a very close eye on.
Absolutely.
Right?
Shreyansi, looks like just the figures are changing. The headlines remain the same. We are again at a fresh record high. This time again, Sensex and Nifty would have scaled up, and also gold. Let's not forget that is also inching higher each passing day now. Bank Nifty expiry, it was banks played a role. In fact, they inched close at the highest point of the day at the close only. The gains were led majorly by the private banks like Axis Bank, HDFC Bank. Sectoral moves came in for the second day. Metals were in action today. Services were in action today. But then two, three stocks in specific where news did create a big impact. One stock was MCX. It opened with a gap up, but later the gains were reversed. This was on the revision in the transaction fees for F&O contracts, and the immediate effect it would be from 1st of October only. Charges were based on the slab earlier. Now it is flat. There's a commentary which came in from Morgan Stanley also. Maybe that capped the gains, and it paired the gains towards the end of the game. In fact, MCS closed with 2% of cut, wherein it opened with a gain of more than, in fact, it built on to the gain and took it higher to 2%, more than 2% of gains. Though the per unit transaction fees is going to increase, EPS will also be, there will be an additional 5% increase in EPS because of the revision. But there was a note mentioned in the study, in this entire note, that there could be sensitivity amongst traders about the increase of the rise in revision in the charges. Second stock which was on radar today since the start of the trade was Piramal Pharma, which opened with a gap up. Investor presentation, company laid out big goals, nearly 3% up it closed up. By FY30, company aims 3 times growth in EBITDA. That means a nearly 25% of EBITDA margin. So good set of comments coming in from their commentary. And the third stock, which of course it was an exclusive information, exclusive news which Anurag brought in, and of course we'll get you more details on that. That was on JB Chemical, wherein a proposed deal to acquire KKR's equity stake in JB Chemical. That is on the brink of collapse, and we saw that stock losing nearly 2%, more than 2% in the trade. It closed with a loss of 2%. So that's about the major stocks and the buzzing sectors. But what should index traders do at this point in time, and the specific trades? To talk about the specific trades, we have Ashish Kayal joining in to talk about the technicals on the markets. Ashish, welcome to Your Trades. Tell us quickly, each day we think that we should be cautious, but then it's another surprising day, and again, that's become more or less a trend, like Ashish, that second half of the day is completely opposite to what we see in the first half of the trading day. Again, another record level. What do this make out? Was that an expiry impact, or is it that a fresh breakout that you've seen on the index?
Hi. If you look at the overall market trend, I think it has been nearly 10 to 12 to 15 odd days since we have not seen a single close below the prior candle low. I mean, that's the simplest way to know which side the trend is and which side one should place their positions. And we can clearly see that happening. So when Nifty started moving up from 25,000, it has been 1,000 point rally, and there is not a single close below prior day low. So that's the direction of the trend, and I think it's futile to try to guess and catch a top here. There is absolutely no slowdown in momentum. We do not see any kind of a negative divergence yet, and the overall trend is positive. We can rather see a sector rotation when we can see the banking space outperforming, some metal space outperforming. There was PSU banks 2 days back that outperformed. So it's a very healthy sign. The advance decline ratio is doing well, and we can see stock specific action has continued. Having said that, on Nifty, I think we should be headed towards the level of 26,100 on the upside or possibly higher. On the downside, 25,850 is the near-term support. So any dips from here, use that as a buying opportunity for short-term to 26,100. And over next few days, I'm even expecting 26,450 levels to be touched. That's Nifty. If you look at Bank Nifty, I think Bank Nifty should continue to outperform because Bank Nifty is the underperformer, or rather was the underperformer about 2 weeks back, and it has touched the lifetime levels just around the levels of around 53,500. So a lot of catch up for Bank Nifty to do on the upside with Nifty, and I'm expecting Bank Nifty to move towards the level of 54,700 on the upside, and on the downside, the support for the index is the previous peak, which is around 53,500 levels.
Absolutely, yeah, Ashish. So there's a lot of catch up to do when it comes to the Nifty Bank. But tell us, which are the picks that you have for our viewers then?
The first pick is from the real estate space. If you look at Mahindra Life space, we can see a very sharp move on the upside. And this stock has not performed well over past few weeks, but has shown a very strong bullish candle in today's session. So looks like it is going to move on the upside with a strong momentum for the target of around 600 and possibly towards 650 levels. One can maintain a stop loss of 554. The next stock pick is HCL Technology. We can see that there was some profit booking across the technology space, but HCL Tech did not binge on the downside much, and rather it is now getting ready to move back on the upside. The overall trend is bullish. Looks like the fifth wave is starting as per Elliott wave on the upside in HCL Tech. We can expect a target of 1906, maintain a stop loss of 1719 on the downside. And the next pick is going to be Hindalco. Hindalco has given a breakout of an inverted head and shoulder pattern. The metals or the material usually starts rallying during this phase of the economic cycle. And I think Hindalco should do very well. We can expect some kind of a dip, use that as a buying opportunity, maintain a stop loss of 690 and expecting a target of 770 on the upside.
So Hindalco coming in from the metal, second straight day of the metal stocks gaining on. Thanks very much, Ashish, for bringing the views on the index as well as on the two specific recommendations. Thanks very much. Moving on, let's get you the word from the wise. Ashish Gupta, who's the CIO for Axis Mutual Fund, is positive on consumption basket, private sector banks, and also government policy-led sectors. Listen in to what he shared. What rationale did he give behind these sectors?
Some of the themes that we are still positive on, even in this construct, one is consumption and various aspects of consumption. It is related to discretionary consumption, includes automobiles, includes even things like real estate, hospitality. So I think that is the one consumption theme that we have. We continue to like the financial sector, particularly the private sector banks. I think valuations are reasonable. And another important aspect is that supply of new stock in this segment is going to be more modest. We have seen increasing supply in multiple sectors, whether it is from private equity or new IPOs, etc. But in this sector, even supply of paper is going to be limited. The third theme for us really is what is driven by government policies, whether it's towards Make in India, PLI, or on the power, utilities, defense side. So those are the three big themes for us.
Alright, then time for a very quick breather on the show, and when we come back, we'll take a look at the big story of the day, so don't go anywhere.
Welcome back. You're watching Your Trades, and now the time for the big story of the day. A lot of action coming in from the IPO primary market. South Korean auto giant Hyundai Motor's Indian arm is one step closer to launching its proposed IPO, which is worth $3 billion. SEBI giving the go-ahead for the mega issue. The IPO will be a complete offer for sale by the parent company. Srishti joins in with more details on this. Srishti, draw us some peer comparison also and tell us more details about this IPO.
Well, yes, Hyundai Motor India gets the SEBI's nod for its IPO as per reports, and this is going to be really interesting because as per reports, this IPO size could be of around 25,000 crores and expected to be one of the biggest IPOs in the Indian markets. As per reports, they also highlight that Hyundai Motor India is planning an IPO at a valuation of $22 to $28 billion of valuation. So all eyes on that. But as we know, as per DRHP, this is going to be a completely offer for sale, wherein Hyundai Motor Company is expected to sell around 17.5% of their stake in this particular IPO. As we know that Hyundai Motor India is the second largest in terms of the market share in the Indian passenger vehicle segment after Maruti Suzuki, and given the kind of margins that they have, then in that sense we do see that the margins are on a higher side of 12.7% versus 11.4% of Maruti Suzuki, and that is because of the higher contribution of their SUV sales, because in the 9 months of FY24 their SUV sales comprises of around 62% of their overall revenue. But we also have done the peer comparison with the likes of Maruti Suzuki as well as Mahindra & Mahindra and tried to find out that how much is the headroom in terms of the valuation gap when we compare it with the estimated forward value multiples, and there we do get to see that the headroom is of around 12% in comparison to Maruti Suzuki or at EV by EBITDA of FY26 estimates multiple. But for M&M, given the kind of run-up that we have seen in that particular stock trading very close to its all-time high, there's no much headroom available. But definitely all eyes will be on that, because after 2 decades we are seeing the first IPO from an auto major coming in the markets. So excitement is really on and all eyes on that.
Well, absolutely, Srishti. All eyes on that mega IPO, and the Dalal Street is really gearing up for that mega IPO. But let's keep it going with the IPO space then, because that is really the flavor of the season. According to 18 Hour sources as well, SEBI has approved Swiggy's confidential IPO filing. The IPO launch is expected to be in November as well. We have Ankur Mishra standing by with more important details. Ankur, tell us a little more about this Swiggy IPO then.
Yes, SEBI has given clearance to pre-filing. What it means is the confidential papers were filed earlier, and now SEBI has allowed that these papers have been given go-ahead by the regulator. What it means, the company will come up with the DRHP later, and for at least 21 days that DRHP needs to be open so that the public can see that, and after that the final RHP will be filed by the company after there is a go-ahead from the regulator. Now all this timeline may take 1.5 months, so we are expecting the IPO to hit market in the month of November. It may happen into first or second week of November, we have been told through sources. But for now, the regulator has given the clearance to the pre-filing of documents. Remember, this route was opened by the regulator in 2022, whereby companies who decides not to make the information public, what is the size of the IPO, and all these details cannot be watched by the competitors and others. And through this confidential pre-filing route, the SEBI has cleared this application, but still DRHP and RHP are still awaited from the company, and the final clearance will come after that.
All right, thanks very much. So Swiggy files through a confidential route, and what we saw was Zomato was a little nervous today, 2.5% cut coming in on Zomato stock. But moving on to an 18 Hour exclusive, potentially the biggest M&A deal for India's drug industry in 2024 is on the verge of being withdrawn. 3 suitors, which includes Torrent Pharma, EQ and Alchem, they're looking to buy KKR's 54% equity in JB Chemicals, and however, sources inform 18 Hour that all the contenders have either withdrawn or are considering to cancel plans to acquire JB Chemicals. Anurag Joshi is here to tell us more details on this. Anurag.
The proposed transaction to acquire USP firm KKR and Company's equity stake in JB Chemicals is on a brink of collapse. Sources have told ET Now. If this deal were to go ahead, this would be potentially the biggest pharma M&A deal from India in 2024. Now, the reason for the likely breakdown are the disagreements that have emerged in the negotiation that KKR has been having with the potential buyers, and the potential contenders for the deal include Torrent Pharma, P firm EQT, and lately Alkem Laboratories came into the picture. Now EQT is said to have withdrawn from the race, while Torrent Pharmaceuticals and Alkem Labs are also contemplating withdrawing the proposal to buy JB Chemicals. To give you some kind of a background, KKR had bought the stake in July 2020 at the peak of the pandemic, and they'd acquired an 65% equity stake then, and they had been for the past few months been looking to sell their controlling equity stake.
All right, thanks Anurag for that lowdown coming in on that particular update. Moving on, then we also caught up with the management of MCX to understand how the recent revisions in transaction fee charges could also impact their volumes or financials. And CBO Rishi Nathani says that business will go on as usual and they don't see any major impact. Let's go across and listen in to that conversation then.
As we understand it, there is no major change in any of these transaction charges. The only change is that instead of a slab-wise transaction charge, we have moved to a single transaction charge. So we are charging more or less at the average realization which we were having. So I do not see any major change impact either ways. So volumes are affected by a host of factors, and exchange transaction fees is just one part of the entire costs that anyone pays to trade on exchanges. So I do not... while it is very difficult to quantify what will be the impact or not, but I believe it should be business as usual as far as transaction charges go, because there hasn't been any major change per se.
Okay, so that's the view coming on from the management on the MCX revision in transaction fees on F&O segment. But then let's move on. Gaurav is standing by with a host of stocks which were buzzing in the trade other than these key stocks. Let's go to Gaurav. Gaurav, over to you.
Well, yes. Let's begin with KEC International. Now, this company came up with a QIP. Reports suggest that the size of the QIP is around 4,500 crore rupees, and the approved QIP floor price is around 976 rupees 0.64 paisa. And as a result, we saw some uptick in this counter. Next, we have is Delta Corp, because this company has now approved the demerger of its hospitality business and real estate business. Now, every shareholder of Delta Corp will get one share of the new entity that will be formed. And as a result, we saw some uptick in this counter as well. Up next, we have is Zomato, and there was some pressure in this counter, and the reason being that its peer Swiggy has now, as per reports, Swiggy has now filed an IPO to SEBI, and they have approved the IPO for Swiggy, and IPO size is expected to be around more than 11 lakh crore rupees. As a result, we saw some pressure in Zomato stock today. Next, we have is Mazgaon Dock, because this company has now commenced production of the first multi-purpose cargo vessel in Denmark as a contract, and as per the contract, the company is going to make 6 vessels, and the
Alright, then thanks Gaurav for that update coming in. So those were the list of stocks that were buzzing away in trade today. But with that, we're completely out of time on this edition of Your Trades on ET Now. From me, Shreyanti Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.